Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. It was a rather slow day in trading once again in North America, but we had a little bit of volatility in European trading. The euro was the biggest gainer on the day, pushing higher against the US dollar. Heading into Asia tonight on Wednesday, the economic docket is rather slim, but in European trading, we have the release of the Great Britain Pounds employment report and the Bank of England minutes. This could create a bit of volatility in European trading, and then with USD trading comes online, we have new home sales and permits out, and this could put a spark into the dollar. Heading into Asian and European trading, though, let's take a look at a few pairs that are in interesting positions that could have a little bit of volatility in their steps. The first is the New Zealand USD. This cross has moved down since touching the top of the descending triangle at around 81, let's say 82, to currently around the 81.3250 fib level. This level has proven resilient so far. The cross did move down below on the last 4-hour channel, but could not close below. It'll be interesting to see if we get a bounce or hold at this level. If we get a bounce at this level, the 50 fib, we could see another pushback higher towards the descending trend line, and then ultimately maybe a break above that in the short term. But it'll be all about the price action around this 81.32 level, and if we do break below the 50 fib, we could see a move lower, at least down to the 80.80 level, which is the 0.618 fib from the last move higher. Let's take a look at another pair, the Great Britain Pound USD. As we know, they do have economic data out tomorrow, but on top of that, we also have the pair breaking above the descending trend line that had capped the price action over the descending trend line that had capped the price action for over the last year, but it had been pierced once before earlier in the month, but the cross pair had moved back below it, but now has simply sliced right back above it. But what we have right above at this level, let's draw this line once again. Right above this level, we have a descending trend line that, if we look at it carefully, descending trend line, let's say roughly right there, a descending trend line that has capped the price action 1, 2, 3 times. So another test back up to this level around the 0.16150 level could find buyers, but it is encouraging that the pair did break above the high for the week, and it seems to be closing above the 161 level, so we could see a rotation higher towards that. If we do get a breakdown and another close below this descending trend line, I would expect the pair to move down lower towards the 0.382 fib at 160, and then ultimately towards the 50 fib at 159. The last pair we're going to take a look at is the USDJPY cross, just because the pair, if you look at it, has finally broken below this descending trend line that had capped the price action over the last month or so. Broken above, and the pair did break above the yearly high set around, the weekly high around 78.85. If we get a close above this level, we could see a rotation higher, ultimately targeting the 79.65 levels. All right, that's it for me and Chris Keene at A Keen Point of View, and this is Currency Watch. Remember to keep your trades keen and to play it safe.